It's already May. I don't know how that happened, but it is. For those of you that celebrated, I hope you had a great Cinco de Mayo. We are almost halfway through Q2. While many financial markets are hot, the real estate market is not. I wouldn't say that it's too hot. I wouldn't say that it's too cold, but it's also not just right. We're still trying to figure out what is happening here in the Sacramento region. We're not seeing the strong spring numbers that we would like to, but it's not as bad as we've seen in some really rough years in the past. So are we getting back to what we would call maybe a normal market? Normal volume, normal pendings, and normal amounts of inventory? Maybe. And maybe this is just the new normal. And as much as I really dislike that phrase, this could be it for the next couple years. This might be our new normal. Sales volume is still off of pre-COVID numbers by, about 20%, 25%, depending on your city or your zip code. So the real estate market just is. And part of that is because mortgage rates are still being stubborn. Traditionally, over the last 30 to 40 years, they're great. Mid sixes, not bad, but they're much higher than what we got used to. Mortgage rates at the beginning of the year were down close to 6%. They bounced back after all the Mideast conflict. They were up to 6.5%. They've improved a little bit. And I would say that mortgage rates right now, don't quote me on this. Again, as always, I'm not a lender, so I can't quote rates. From what I hear, they're somewhere in the range of 6.25 to 6 3/8. Not bad, but it's also not good enough to improve affordability and get some buyers back into the market. I was reading a report the other day. It went over some of the top markets in the United States, and it broke it down, and it went over the top markets that are improving and appreciating and the top markets that are depreciating and values are actually going down. So it was really interesting to see the disparity between those different markets across the country. And that's why, again, I always say it's very dangerous just to take a national report at face value and apply that to your local area. We are seeing inventory rise on a national level. Home values are pretty flat on a national level. And I think a lot of the top sites, Zillow, Redfin, Realtor.com, and even the National Association of Realtors, they've all revised their projections for 2026, and they've revised them down. So because of the Mideast conflict, because of oil prices, we have also, the Fed decided that they were going to hold their short-term interest rate, their Fed funds rate, they were going to hold stable. They did not drop the rate this meeting. So all of those things combined, and we're just kind of seeing a really stagnant market. And I hate to use that word, but it's kind of stagnant. We'll see what happens. If we do get some relief in Iran and the ceasefire gets ratified and we get the strait opened up and things start to move again, we start to get some more active shipping, oil starts to flow, things like that. Or if we see oil prices come down a little bit, that's going to help across the board, but too hard to say at this point. And for a lot of folks, we are seeing some really challenging times. Foreclosure rates are up, and while they are historically still low, it's enough that I'm starting to pay attention. I'm curious how many of those are situations where, maybe they got into really hot markets like Austin or like Sacramento back in 2022. Maybe they've been holding on for the last few years and now everything has just finally accumulated and it's a little too much to keep that house. I'm very curious this time around. I think we are going to see a few more short sales. I also think some banks are going to try and work out those situations. And if someone's in foreclosure, I think the banks are going to step in and they're going to say, hey, let's figure this out. We don't want to take the property back. We don't want to foreclose. Maybe we, give you some temporary relief and we'll do a temporary rate reduction for a year to help reduce that monthly payment. You can get back on your feet, or maybe we'll take the arrears, apply it to the end of the mortgage, increase the balance a little bit, but let you kind of start fresh. So I'm curious. I think we'll see more of those scenarios versus banks just going straight to foreclosure. Again, I think we've got at least another year, maybe 2, maybe 3 of pretty flat pricing in the Sacramento region. Again, a lot of folks have equity. They don't have to sell their homes for less, but at the same time, buyers really cannot afford to pay more right now. And we're just going to see that continued deadlock. So I would say, as always, if you're a seller, price your home right, do the best that you can, prep it right, price it right, and make sure you've got a great agent that is marketing your home appropriately and knows how to be strategic. For buyers, this is a tough one. The great properties are selling quickly right now. They're getting multiple offers and they're ending up in bidding wars. So if you're a buyer that's not interested in competing, maybe you do need to look for homes that have been on the market for 30 days or more. Maybe you do need to take a home that needs a little bit of work, and that will be your opportunity to at least get into the market, stabilize yourself, stabilize the house, make some improvements. And then in a year or two, if you want to reapproach, now you have some equity, you're in the game, and you can sell that home and make your move up. There are options there. So anyway, all that being said, let's get into the data for this month. This is the month of April data for 2026. And in the Tri-County region, homes for sale, number of homes for sale increased by 13.1%. Pretty good, not bad. So that's a good increase in inventory. And I think that's going to help buyers that have had a tough time finding anything that they really connect with. However, that is 1.1% lower than this time last year. And I think that's partially because the market is just feeling that impact of higher gas prices and the Mideast conflicts. Pendants in the Tri-County area dropped by 0.7%. That is uncharacteristic for this time of year. That is telling me buyers are pulling back. They are not engaging. They're not making as many offers. And that's going to translate to some lower activity next month when all those homes start to close 30 days later. That being said, that pending activity is still 7.8% better than this time last year. So that is a little bit of positive news. Mortgage rate volatility is just pushing that activity down, and it's temporarily forcing some buyers onto the sidelines. Not surprising to me. Home sales increased 10.1% in April over March, and that continued some strong activity this year. So that's great. But again, I think now that those sales numbers lag by 30 days, let's see what happens once we get the May numbers. And I think we're going to see a little bit of a downtick in the sales activity. So days on market improved by 21.7%. That is huge. So the average days on market dropped from 46 down to 36 days. List price to sold price ratio improved another percent. So now it is up to 99%. Homes are selling, I should say homes that actually make it to sale are selling for 99% of their original list price. That's pretty solid. We haven't seen 99% in 12 months. I think the last time we saw that was actually in April of 2025. Homes are still taking 3 days longer to sell than they were a year ago, but not a huge difference. We're right in line on that. The median sold price of single family homes in Sacramento from March to April increased 0.8%. So not a big move. At least it's positive. So the median sold price in the Tri-County area is $600,000 even. And funny enough, that is the exact same price that it was 12 months ago. So like I've been saying, pretty flat market. I'm curious to see how the rest of the year goes, but so far this seems like we're shaping up for a very similar market to 2025, just for different reasons. Started out, had a really strong start to spring, and then immediately lost that momentum. And the rest of the year was just kind of flat. So we'll see how things continue to move. And maybe if this Mideast conflict gets resolved, if we see a little bit of rate improvement, then maybe we will actually have a better Q3 than we normally would and finish up the year in a strong way. We'll see. Months of inventory for the Tri-County area increased from 2.1 to 2.2 months. Not a huge change. That's still pretty light on inventory. So we could actually use a lot more listings in this area, but that would potentially, supply and demand, that would potentially pull home values down a little bit if we don't see an equivalent increase in buyer demand. We will see how things move over the next couple months. I'm watching all this very closely. Moving into Placer County, residential homes for sale increased by 13.2% in April, slightly less than last year, still solid. Pendants only increased a modest 1.6%. from March to April this year, that is better pending activity than we saw this time of 2025. Sold homes dropped by 0.5%. That's not totally surprising due to the financial instability and all the things going on in Iran right now, but it's about the same as it was this time last year. So again, we're seeing very similar trends to 2025. Days on market dropped a massive 34% in Placer County. So that is down from 50 to 33 days. That is a huge shift. The list price to sold price ratio improved, same as the Tri-County area. It went from 98 to 99%. That's a really great sign for Placer County sellers. And both stats are pretty even. The days on market and the list price to sold price ratio almost dead even with this time last year. Median sold price for single family homes in Placer County was unchanged month over month. Normally we would see a slight increase, but we did not. So that held flat, but good news, it is 2.3% higher than it was in April of 2025. Inventory levels rose by 14.4%. Inventory in Placer County is up from 2.1 months up to 2.4 months, and 2.4 months is exactly where we were last year. So again, we're repeating. April appears to be losing some of the momentum, like I said. So we're just going to have to watch, see how Q2 finishes up and see how the summer season shapes up. That may be a very good opportunity for buyers this year. We'll see. However, the danger, if you're hearing that and thinking, wait, I'm a buyer, I should wait until summer. Maybe not. We cannot predict the future. And the way things have been, if mortgage rates go up, well, now you just waited and you're going to have a higher monthly payment. You may qualify for less because you're going to have to work with higher mortgage rates. A mentor told me a couple decades ago, we know what we know today. You can make an informed decision today. You can make the best decision possible with the information that you have today, but we cannot project tomorrow. We can do our best, but sometimes with real estate, it's similar to planting a tree, right? When's the best time to plant a tree? 30 years ago. When's the second best time to plant a tree? Today. So similarly, when's the best time to buy real estate? 30 years ago. Would have been amazing. When's the second best time? The way the market is right now, probably today. So if I can help with that in any way, buy or sell, reach out. Would love to at least meet with you, give you a consultation, give you the information to make the right decision for your specific scenario. As always, please like the video, share with your friends, subscribe to the channel, and I will be bringing more information for the Sacramento area as a whole and for Placer County as it comes to me. So thanks again. I'll see you next month.